All right, guys, Google had another strong earnings report. This is 10 straight quarters now where they beat on earnings per share and revenue. They usually don't give guidance. They usually give some, tidbits of future expectations, through CapEx spending, which they actually bumped that up to 85 billion. So that's what we want to see. Demand is still strong because remember, eventually when these companies start cutting back on spending, that's where we're going to see a dip in the market, most likely, okay? So we're not there yet, so that's a good sign. So they beat on earnings per share and revenue nicely. I looked at each area, the cloud division, search, everything, advertising, it all beat and was up nicely year over year. So Google is one of those companies that's getting a lot of hate because they think, their search is the competition coming into their space, but they're going to adapt. They're going to make their, search better, which I use them a lot with AI mode with Google and I love it. And this company's involved with artificial intelligence. They're involved with so much, obviously YouTube, what I'm talking to you through right now. And so this is a company, YouTube TV as well. So this has been an undervalued company for so long. And even at this price at 193, obviously I liked it better when it was lower and we were buying right in April, May, and we've ridden this up and made some good money, kind of like Amazon, for example, okay? But this company, I think, is still a good buy because I do believe it's going to go above $200 per share at some point and beyond. So this is an easy long-term hold for me, guys. Google, Amazon, those are two I believe will continue to do well, even if there's, hate or lawsuits or, where they have to pay fines here and there or antitrust stuff. Remember, that happens every year or two. That's part of the game. But these will always recover. They keep beating on their numbers and they have hordes of cash on their balance sheet, okay? So that's the key. These companies we know are going to be around down the road. So in the end, that's what we want to be holding, right? It's nice in July. We're playing these high risk, high reward stocks, but always remember to protect your profits when you're up, which is what I try to teach you, right? To play with profits only, take out your initial investment and only play with profits so you can't lose a thing. And even better, you could roll some of that money over into safer investments in our Millionaire Maker portfolio, right? These companies that we know are going to be around long time, good financials, balance sheet, valuations are reasonable, okay? Positive free cash flow, all that. That in the end is where we want to be, guys, because remember, fundamentals in the end win out. So right now, a lot of these small caps, right, these high risk stocks that we're playing, nobody cares at the moment about valuations, balance sheet, and financials, right, while it's risk on. But believe me, that will change one day. That's why I've been saying you don't want to overstay your welcome. And that's why we want to start getting our mindset back to the long-term, safer, profitable names, especially going into August, September, which are historically weak months, okay? So make sure to protect your profits, guys. And I will let you know when I see good dip buying opportunities. Remember, in August and September to feed our long-term Millionaire Maker portfolios.